Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Yes, in fact, it's been a strong performance for JSPL, so the stock will also be up for you. After 13 quarters of losses, they finally posted a net profit on an adjusted basis. Naushad Akhter Ansari, the CEO of the company, is with us. Congrats, Mr. Ansari. On an adjusted basis, your results look good. But just give us some more clarity on the exceptional items this quarter.
So that is something, there was some royalty payment for the earlier iron ore, which government wanted, and for which the provisioning has been done primarily because earlier it was not provided for. So it is primarily related to that.
So with this, have you fully provided for the royalty, or should we expect more of the same in the coming quarters?
No, this is fully provided for.
Okay. In that case, what are the sales volumes? Can you give us some details on the revenues, the sales volumes targets that you have for FY19, both for India and Oman?
Yes, so the total sales volume, which should also be something similar to the production volume, should be somewhere close to about 9 million tons, both in India and Oman. Out of that, a little over 2 million ton will come from Oman, and roughly about 7 million ton or so will come from India. So that's the kind of rough number for the sale and the production.
Mr. Ansari, good morning. The domestic steel business was quite strong. What was the EBITDA per ton, and can you hold on to this performance?
If you remember, in quarter 3, it was close to about 9,800. This quarter, it had been more than 12,000. In fact, close to about 12,800 and so. So it is a substantial increase. Primarily, this has happened because we have been able to reduce our costs substantially, and also the production volumes have gone up. So therefore, all the fixed costs are, the manpower costs, etc. That is all getting diluted to that extent. So that is how you find that these EBITDA numbers look much better than what they had looked in the quarter 3. Going forward, the market still looks good. Obviously, there would be challenges. We have no doubt about it. But we would imagine that with the kind of demand pull which is still there, the kind of cost reduction program which we continue to have, we should be able to operate in that region where we left it in the last quarter, so to speak.
Okay, so Oman delivered its best performance ever. Can we expect a better performance from the Oman business over the next few quarters? Is an EBITDA of $300 million on the cards perhaps in FY19?
Yes, so that's the kind of number, we are looking at something close to about $300, maybe somewhere between $280 to $300 million is what we are expecting from Oman. All that will be possible because of a number of factors. Number one is that we have got some additional gas in Oman. Earlier we used to buy much more metallics. Now, going forward from August, September or so, our requirement of metallics, purchased metallics will come down, and there is a substantial difference in the cost. So that should add to the EBITDA number. Then we have also putting a caster, the second billet caster. That should be up and running sometime around September or so, and that should be able to give us additional production, because caster, of course, is a limitation out there. And plus, we are also producing more value-added grades now, much less of square billet. We are actually making value-added rounds and so on. The rebar production has also gone more than 100,000 tons per month. So all these factors, and plus very stringent cost control, these are all factors which have resulted into this high level of EBITDA. And going forward, we are also hoping that the market remains at that level, and that we are able to get the kind of numbers which we have mentioned.
Okay, Mr. Ansari, what about steel prices? How do current prices compare with, the fourth quarter of FY18, the quarter that just went by? And are you planning any increase?
So by and large, the prices are at the same level. It is not gone up very substantially. It is in the same region. In fact, in some product, you will find some pressure. For example, in rebar, there may be some pressure, whereas in plates, maybe there is a marginal increase. But overall, I would say that the prices in this quarter are almost similar to the quarter 4 prices.
Okay, just hold on. I just want to point out a couple of stocks in pre-open. PC Jeweler is up 10% in pre-open, so that of course would be your top stock to watch. There's a buyback made and the stock is in F&O ban. And of course on the way down, Federal Bank, that's down about 5%. So these are your top F&O gainers and losers. in the pre-open market for now. Mr. Ansari, what about the power business? What's the outlook there?
Well, I wish that we would had the similar kind of success in power as we had in steel. But the fact is that in power, the coal shortage really continues to be a major problem. The availability of coal at the right kind of price is simply not there. And that's really, most of the power plants, including us, are suffering because of that. There is, in addition to that, the PPAs are also a major issue. So, yes, I mean, we only wish that the power situation also improves, power business improves. But as of now, there are major challenges out there. We still don't have, but figured it out fully. We still don't have the answers which I can tell you that, okay, by this time it's going to be solved. We don't know that. It's something which is, we are hoping that the commercial mining of coal will help, then it can perhaps lead to more availability of coal. If that happens, that will certainly be a welcome scenario. But I really don't have an answer by what time this problem can be solved.
All right, that's fine. In fact, we will await more clarity on that. But can you tell us a little bit about the balance sheet? What was the debt at the end of FY18 and where is it headed now?
So, in FY18, at the end of FY18, our debt level was close to about 42,000 crore. Our peak level debt was 46,500 crore. So, compared to our peak, we have brought it down by about 4,500 crore. Going forward in FY19, based on our preliminary estimates of EBITDA, likely EBITDA, and the amount of money which we need to pay for interest, etc., we expect that we will be able to reduce our debt by about 4,000 to 5,000 crores. And that's the kind of number we expect that we should be able to achieve. So from 42,000, we should be able to bring it down to 37, 38,000 kind of a number.
Okay. Is listing your Oman subsidiary likely in FY19?
Yes, certainly it's a possibility. I mean, there is a work which is going on, but still lot of ground is required to be covered. So by what time it's going to happen is a question, but the work is already ongoing. It's something which is on the top of our mind.
Okay, final question then, is the deal with JSW Energy still on as the deadline is June 2018?
No, we are not calling it out. The long stop date remains June, and the two companies are talking to each other. Most likely they will extend this date by several months or so, maybe a year. So that's a discussion which is going on. So as of now, no, it's not called off, no.
Okay, Mr. Ansari, thanks a lot for your time today. That's JSPL down about 1% in pre-open, had a big rally of course yesterday. The pre-open has settled 38 points higher on the Nifty and about 62 points higher on the Bank Nifty, and flat for the mid-cap. Federal Bank would be your stock to track, 8% lower is what we have in pre-open on that one. Ashwani, if this is where the markets start, what would be the first trade? Or as you said, you would avoid the index completely?
See, the index is avoidable. Bank Nifty is starting about 60 odd points, IT 50. So nothing significant. I would think that you should remain range bound. The good thing is maybe the mid caps are starting out in the positive. Other than that, ICICI Pru you can buy with a stop of 445, target of 470.
Okay. Well, Jubilant Life is another stock that should come up on your screen. The results were not bad. Of course, they came during market hours and the market reacted to it, posted better than expected top line, margins in line, but profit was impacted by a one-time cost. And the big positive, of course, was the process of debt reduction that's continuing. Here's an interesting chat between Rakesh Jhunjhunwala, who attended an analyst call and spoke to the company's management.
So I would like to understand what would your tax rate be next year?
Tax rate this year was 26.3%.
Right, next year?
Next year it will be in the same range.
Right, and you declare dividend only of 3 rupees? That means your payout ratio is less than 10%?
No, Rakeshji, as you have seen that next year we are increasing our capex to invest more into business. See, that is why this year we have been conservative and maintained our dividend.
Okay. And sir, how is there is a recovery in the generic business in America? As you have said, 25% quarter-on-quarter growth. Has that come because of some new introductions or primarily because of better prices?
So in case of the generic business, growth has come mainly due to the product rationalization, where many of the large players, because of the consolidation in the supply chain system, are moving out from few of the products where we see the opportunities in some of the pockets. We have also increased the capacity utilization in the plants, and due to that, we have been able to place higher volumes.
Both are because of volume growth and because of better price.
Yeah, better price in some of the products.
Right. And do you expect further reduction in prices next year, or they are stabilized now for the entire portfolio as a whole?
Yeah, we are expecting this trend to continue. We still see many of the pockets where we will be able to realize the better prices. We have already started seeing that trend and the signals in the market. Other than that, we are increasing the capacity further in India, which will help us to rationalize the costs. We are also looking at doing more and more in-house APIs with the backward integration in the research. By that, we expect that our costs will go down.
Okay, that was of course jubilant. A couple of other stocks which will be interesting in pre-open. Arvind is up about 1%, had a good move yesterday. But Fortis, there's a board meet today. Ekta?
Yes, absolutely, Anuj. Well, this might just be the D-Day for Fortis, where the expert advisory committee, which comprises of 2 members, will submit their proposal to the board in terms of what the recommendations are amongst the 4 binding bids that have come in. Now, remember that Stancy is a financial advisor. We have Cyril Amarchand Mangaldas, which is the legal advisor. Plus, we have Arput, which is the second financial advisor for evaluation of these 4 bids. Now, the bids obviously are coming in from Manipal TPG, Munjal Berman, IHH, as well as Radiant KKR. Important to note that for Radiant KKR, as well as for IHH, there is a partial amount of the bid which is non-binding in nature and is focused on due diligence. And for the other 2, which is Manipal TPG, as well as for Munjal Berman, it is completely binding in nature with no requirement for due diligence. It will be important to see what is the final outcome, and I think a relief for many people.
Of course, that's true. Something where to look forward, whether there is a decision or whether it just gets kicked forward. There's just one more cue we want to put on the table. Arvind, after announcing its results, also gave a guidance. Mangalam, if you can quickly take us through what they said.
Absolutely, Lata. So they've given the guidance for the textile and brands apparel business. They have said this to us during the interviews during the quarter as well. But this time they've put pen to paper. Textile revenue expected to grow 10% on the back of 35% growth in their garments business. No significant improvement in the margins there. But if you take a look at their brands and retail business, that is likely to grow by 20 to 24%. A tad bit slower than what we saw in the 4th quarter. 27.5% was the growth there. But the important part is margins in the brands and retail business will continue to improve by at least 1%, and this is despite the increase in their marketing investment by about 0.5%. And in the last quarter, which is yesterday, the results came by the margin improvement of the brand and apparel business was the most important. So that is something which is a positive. The management has been saying this. Yesterday, they put pen to the paper.
All right,
so 1 percentage point. Okay, 1 percentage point increase. The stock is reacting positively to that guidance, up 1%. Of course, the results themselves came during market hours. Yeah.
I also want to mention, you know, the entire retail space is up today. Not just Arvind because of course of that guidance, but Future Consumers is up almost about 2.5%. The other Future Group stocks are also moving in the green. D-Mart is showing a green tick as well. Ashwini, anything from this space that you would trade?
See, NIT Tech, D-Mart and Future Consumer are a couple of these players. Future Lifestyle has also shown strength. So probably there will be some rub-off in the retail stocks.
It's quite possible that the Future Group is doing well also because Mr. Biyani is choosing to reiterate what he has said before, that he's looking for some foreign stake, looking to offload to some global majors. So Future Consumer in particular